Today, I want to go over the importance of why I believe you must have a system that you follow, whether it be you follow, 80% of the time and you have like 20% discretion. But I do believe that you need a solid foundation to properly trade. Otherwise, you're never really going to know if you did the right thing or not. And I was talking to one of my friends who was in an old community with me, and he was having some problems. And I was like, hey, these are some of the problems that I ran across that you're dealing with now. Like, I had those same problems and I had to figure them out on my own. And one of the things I told him was that when you take a trade and you don't know how you want to enter and the things you want to look for, how do you know if you did the right thing or not? You don't know. So then let's say you take a loss. Was that a good loss or bad loss? Was there something to learn from it? Is there something you need to improve? Like, how do you know? You don't know. And what I was trying to tell him is that you need to have a system, because if you don't have a system that you follow, you just don't know. And you're going to be left feeling off and worried and things like that. And one of the things I wanted to show is like today, right? I took this break even. And if I had been worried about it and being like, well, I don't know if that's the right thing, would I have then taken this next trade, which ended up being a winner? Like, there's no way to really know unless you have a proper system for that you follow, And so I wanted to go over, exactly how I look at the market and the things I look for and things that maybe you want to take away and different things you want to try. But at the end of the day, you have to test. And through testing is where you then figure out what makes sense to you, what works with your personality, the way you want to trade, whether you want to scalp or trade intraday or trade swing trading or higher time frame, whether you want to take a lot of trades or wait for certain things, like one of the things that he was saying to me was, okay, well, I don't want to wait for price to come back to the edge like this because I want to trade, like, for example, like this POI. And then, sometimes that POI works and I'm like, okay, cool. But are you willing to take a loss here and then also take this trade? And then are you willing for this to be a loss and then take a trade maybe up here? Because if you're not willing to do that, then you should not be taking this trade. That should not be a trade you take. But the problem is many people don't think about that. They're just thinking about, well, I don't want to miss this trade, or, oh, I saw this work one time. No, like, stick to a specific rule set, and it doesn't matter if the trade goes without you or not, because you've tested it enough times. You know that you don't need to catch everything because you only need a few winners a month. If you're trading our strategy where you're trading like, 5 to 8 to 10% per win, you only need about maybe 3 winners a month, 4 winners a month. So then why are you rushing it? So let me just go over what I look for and what I saw on EU. So actually, let me go to the 4 hour. So essentially, I saw that price was very bearish, right? It's pretty obvious that price is bearish. Like, I don't need to like tell anybody that. Like, if anyone thinks it's bullish, you're fucking crazy. So then I went to the 15-minute. I'm like, cool. I want to go in line with the 4 hour and find things that make sense. So what I saw was we had this down move and then this lower high, and then we had a lower low. So my next thought was that price is going to come back to at least this zone, right? This range is where price is going to come back. And then I refine that on a lower time frame. So then price comes here, and then we see this kind of movement and then a break. Now, some people would be confused by seeing this and thinking that price is now bullish and they want to look for buys here. Now, I talk about this in my other video about how to identify trend. Now, what I like to say and what I do as a rule is I look for, okay, where is my low? This is my lower high. Until we break that, once we break, then the point between the two, that's the highest, is going to be your high. So this is my high, which is denoted by this orange dot. So this is my new low and this is my high. Now I started looking in this. I'm like, okay, well, this is mitigation to mitigation. This is mitigated. This is mitigated. And then we have this. So I'm like, okay, cool. There's 2 unmitigated places. There's here. I don't want to trade from here because this is too low in the range. Typically when price wants to pull back, it's going to want to pull back to at least like 50%. And then this is above 50%. Or if you have it up here, right? 50% is up here. I even like to trade in the higher end of like 75% of the range. So I'm like, okay, cool. So price comes up into my zone, right? I have this as my full zone. And then I have the refinement. Where's the refinement? This last up move before the down move on the 15-minute. So I'm like, okay, cool. Well, when do I want to drop to the lower time frame? Well, I want to wait until we get into the zone. Now, again, this is where people have problems, because what happens is they'll drop to a lower time frame and they'll look at the 1 minute or something and they'll be like, oh, well, price is bullish now. Like, we have this lower low, lower high, lower low, and they start seeing price going bullish, and they want to, try and trade off of these 1 minute zones and try and go higher, and they want to, they get too lost in the 1 minute. I'm like, no, you need to pick a time frame that you want to follow and follow the order flow on that time frame. Don't be looking at too low of a time frame. If you want, you can use the 1 minute, but you're going to need a higher time frame, a mid time frame, and an entry time frame. So I have the 4 hour / 1 hour as my high time frame, the 15 minute / 30 minutes as my mid time frame, and then I have the 1 minute as my actual entry time frame. And so what I was telling him was, like, when you look at trend, what you're going to see is price is going to go like this, right? And this could be like the 1 minute, right? Now on the 15 minute, it's just going to look like this. Now, what's going to happen is you're going to see the 1 minute needs to go bullish before we can continue lower. And that goes in line with this 15 minute. So what is this? This is just a pullback on the 15 minute to then go lower. So if you're following the 1 minute, you can get caught out thinking that we're bullish, but in reality, the higher time frame is bearish. And that's why I like to look at the 15 minute or some variation of higher time frame. If you want to trade like the 30 second or the 15 second or the 1 minute, your higher time frame could be the 5 minute. But for me personally, I like to use the 15 minute because I find that 5 minute can kind of fake you out. So what you do, you look for supply and demand zone on the 15 minute, and then you look for what? I'm looking for the 1 minute to go back in alignment with this, right? I'm looking for the 1 minute to become in alignment, because now I'm pairing my higher time frame with my lower time frame. So you have the odds in your favor because you're pairing multiple time frames together instead of trying to just trade one time frame. So then what I see is I drop to the 1 minute. I don't drop to the 1 minute until we come into the zone. I don't care what is going on in here. It's like you're basically just blind. Like just draw a box there, and then you don't see anything until we get in there. And then once we get in there, that's when you look in the zone. Okay, cool. What do I want to look for? Okay, I want to see some kind of Wyckoff formation. Now, what the fuck is Wyckoff? For me, Wyckoff is literally just the changing of structure and sweeping of liquidity, the exchange of weak hands to strong hands. I don't actually sit there and like label like, this is the buying climax and the AR and the STMB or the UT and then the UTAD and then the break. Like I'm not doing that. I'm just looking for, basically, I don't want to see price come up in here like that. I want to see a nice, I want to see highs getting taken out, because what does that signal? It signals people were trying to sell, stops get taken out. People trying to sell, stops get taken out. That's what I want to see. So what do we see? People trying to sell early, stops get taken out. People trying to sell early, stops get taken out. So I'm like, okay, cool. Now we're in our zone. We didn't just rip into the zone. We came in a staggered stance. And I'm like, cool. Now I want to see a break of structure. So I want to see a shift in momentum, because this does what? Well, the 1 minute is bullish at the moment. I told you earlier, I want to see the 1 minute come in line with my structure, so I have more odds in my favor. You can trade this. You can say, okay, price went bearish on like a 15 second. You could trade this and you probably take a loss here or maybe a break even. That's just not my style. I prefer to have set rules, and that's what I was talking about earlier, is you need to have a set rule and system that you follow. You cannot just take this, right? You cannot just take this trade, take a loss, and then be mad that you took a loss. You have to understand that there's probabilities that come attached to the thing, and there's certain things that make more sense and have a higher probability, and some things that have lower probability. Now, for example, this would be lower probability, but your risk to reward is better. And so if you do win, you might take like 20R, whereas my trade, I might only take 10R, but I have a higher win rate. So you got to figure out what makes sense to your personality, what system makes sense to you, and you got to develop a system and test it. So for me, I want to see a breakdown. So I see a breakdown in price. Cool. That's all I want to see, because What do I see? I want to see price taking liquidity, right? Took liquidity, boom. I see a test of that. So price comes back and test it, telling me that it's holding. This is a strong high that's being held. And then I see a breakdown in price. That's all I need to see. So then where's my entry? I have this zone and I just want to enter on 50%. So all I saw was 50% entry, stop above the high, and then price breaks down. And then I just moved to break even. Well, actually, sorry, I didn't move to break even. I took partials once we broke this low. I took 25% off, and then I moved my stop to right here. So I ended up taking like a really small win. And then what do I see? I see price come up and sweep again. And I know because of my system that this is possible. Why is this possible? Because there's areas up in here that have not been mitigated, and we tapped lower into the zone. We didn't tap the 50% of the zone, or we didn't tap higher into the zone or deeper into the zone. So I know that this could just be equal highs, catching more people on the wrong side. As I said earlier, price likes to sweep multiple times. So I understand that. Now, if I looked at this and I thought, oh man, like maybe price is bullish now because it's kind of aggressive. Maybe I should look for buys here, or maybe I shouldn't sell. Well, that's where you get caught out, because the problem is you don't have a system. You don't follow anything. And so you need to develop a system. You need to test. You need to figure out what makes sense to you. So for me, I'm okay with taking a second trade. I'll take 2 trades and 1 higher time frame POI. So this is my first trade, didn't work out, so I'm going to take another trade. So what do I see? I see a sweeping of liquidity, and then I see a breakdown. So this to me was the low. Again, it's like a fractal low. Because this was a news event, I was willing to use this fractal low instead of waiting for it to break here, because it just doesn't make sense. So what do I see? I see price come down. It comes and tests this area, and then I see a breakdown. Where do I want to enter? Well, there's 2 ways of entering. One of the ways is I like to wait for price to sweep. And then once we sweep, I like to look for just entering straight off the 50%. Or I like to see price come down, and then I like to see a test and then a second test, and then I enter. So this one is better confirmation, but sometimes you're going to miss trades. And so if I'm not sure, I'll wait for the second one, because it's more of a confirmation. So I see my first break of structure, then I see a pullback, and then I see another break of structure. So I'm looking to enter on this POI right here. Now, if you go to the 15 second, it's a little bit more clear. So if you go to the 15 second, you have break 1, and then you have break 2. So I'm looking to place an entry somewhere in here, typically 50%. Oops. And then I don't just chop my stop right up here. I'm not trying to do that. So I'll have like a 2.5, maybe even 3 pip stop. And then I go to the higher time frame. And then I see price drops to the downside. Now again, where's my target? Again, you need to have a system. You need to have a system for how you manage trades. You need a system for how you enter. You need a system for what areas of value am I going to enter off of. So what higher time frame POIs will I enter off of? Like what areas will I look to want to drop to the lower time frame to look for an entry? And then where's my profit targets? So the first thing for me, my profit target is I always want to target the 15-minute low, the 15-minute range that I'm playing. Sometimes it'll be a 1 hour, but again, the 15-minute range that I'm playing is this. Because why am I targeting this low? Well, if you understand how price should move, price should do this, right? If we're in a bearish trend and you get a pullback, where's the next liquidity sitting? This should be a protected high. So where's the weak low? Here, that's where liquidity should be sitting before we then get another pullback and should continue lower. So I want to take partials here in case this decides to reverse, or price decides to come back and take me out for break even, because that happens many times. I have a system for how I want to exit. So I take a lot of partials off at this, like likely 50%. And then my next target is 1 to 10. So I'll typically take off pretty much the rest of the trade, because I don't want to wait through a long pullback. So I'll just exit a trade. So I exited at 1 to 10, and that was it. And that was everything. And then I'm waiting. Again, I have a system. How do I want to enter? Okay. What am I looking for? So at this point, I'm thinking, okay, what do I want to see? If you go to the 1 hour, you can see what? We see a breaker structure to the downside. This is a giant supply and demand zone that takes out liquidity and rips to the downside. So this is my entry block, and it's a big block, so I want to see something specific. So what do I want to see? Well, one of the things I noticed was when price typically rips really far on EU, it's unlikely it's going to come back up here. So I want to look at imbalance areas that are in line with this buy to sell. So I see that imbalance area and I'm like, cool, I want to see price sweep liquidity into the zone. This is one taking liquidity. This is the second one. If I see this come up and then I see a breakdown and price come back, then I'll enter. So then I see what? Price come up. And then some people, including myself, would enter on this, right? We look for breakdown and we're looking for price to come back to 50% and then you enter. Or you could, if you're not sure and you think price might come up higher, you wait for this momentum shift. Right? You wait for price to break down and then you wait for price to pull back and it just never pulls back. Now I'm sitting here thinking like, oh man, like, oh, I should have taken the other trade. Like maybe I should have taken, you know, this entry, or I should have waited for, you know, oh man, if only I had taken this, right? This is mitigation to mitigation, or like this is mitigation to mitigation. I should have taken one of these entries. No, I'm not thinking that because I've tested this before. I know what I want to see. I have a system, and that's why having a system, or at least a general set of rules to follow, is very helpful, because you can have different entry models. You can say like, okay, I want to enter on this and I want to enter on this, but I also want to enter on this. That's cool. Have different entry models. Just understand what you want to trade so that then when a trade goes without you, you're not worried. Like, am I sitting here mad that I missed this trade? Like maybe in the moment I'm like, dang, I wish I had taken that or gotten into it. But then like seconds later, I'm fine because I understand that I don't need to get into this. This doesn't matter to me. Why? Because I have a system and I know that my system has an edge. I know that typically month after month, I'll be consistently profitable, and especially over a quarter and over a year. So why am I worried about it? I'm not. And that's the big thing, is you want to be able to trade with mental ease. You don't want to be trading in a mind frame where you don't know how you're going to feel. You don't know like if you did the right thing or not. You don't want to be trading where things are just constantly feeling hard. You want it to feel easy and you want it to be replicatable and something you can repeat over time. So yeah, that's what I want to talk about today. I just want to talk about the importance of having a system and why things should follow that system, and just testing it and figuring out what makes sense to you. If you have any questions, drop them below.